This is a report of the Senate Joint Committee on Finance, Custom, Excise and Tariff, Trade and Investment, Public Procurement on the Finance Bill 2021. Introduction. The Senate at the plenary session on Tuesday, 7 December 2021, read the letter of Mr. President presenting the Finance Bill 2021. The bill seeks to support the implementation of the 2022 federal budget economic growth and sustainability by proposing key specific taxation, custom, excise, fiscal, and other relevant law. The Senate, on its sitting on Wednesday, 8 December 2021, read the Finance Bill, the first and the second reading, and refers same to the Committees on Finance, Custom, Excise and Tariff, and Trade and Investment for further legislative action within the legislative standing order. The 12 acts to be amended under this Finance Act contain 39 clauses. The committee immediately swung into action and held several meetings with members and critical stakeholders. 2.0, that has to do with the membership of the committee, and that extends to page 2. On page 3, the highlight, the Pioneer Finance Bill marks a significant milestone for Nigeria as it aims to bring the country tax legislation at par with global best practices. It hints on the following thematic areas. 1. Promoting fiscal equity. 2. Aligning domestic tax law with global best practices. 3. Introducing tax incentive for infrastructure and capital market. 4. Supporting small businesses. And 5. Increasing revenue for the government. The Finance Act 2020 was predicated essentially on having no new taxes, no new incentive due to the COVID-19 impact on the economy, and as such, it was structured across 4 broad thematic areas. 1. Enacting counter-cyclical measures and crisis intervention initiative, tax fiscal responsibility and public procurement reforms, reforming fiscal incentive policy for job creation, ensuring closer coordination of monetary, trade, and fiscal policies, and enhancing tax administration. Mr. President, distinguished colleagues, in 2021, at the instance of the National Assembly and following the stakeholder consultation, the key reforms of the Finance Bill 2021 are aimed on the following areas. 1. Domestic revenue mobilization, tax administration and legislative drafting, international taxation, fiscal sector reform, tax equity, public finance management reform. The list of acts to be amended in the Finance Bill 2021 include 1. The capital gain tax, which has to do with the stocks and shares. 2. The Company Income Tax Act, which has to do with the charge of tax, Nigerian companies, cable undertaking, insurance companies, profit of companies from certain dividends, profit exempted, board powers to access an exchange on overturn of trade and business, total profit from all businesses, payment of minimum taxes, gas utilization, the downstream operation, time within which tax, including provisional tax, is to be paid, deduction of tax from interest, deduction of tax at source, and implementation. 3.3 contain the Federal Inland Revenue Services. 3.4 has to do with personal income tax and the relevant aspects of the tax to be amended. 3.5 has to do with stamp duty. 3.6 is Tertiary Education Trust Fund Establishment Act. 3.7 is Value Added Tax Act. 3.8 is Insurance Act. 3.9 is Nigerian Police Trust Fund Act. 3.10 is National Agency for Science and Engineering Infrastructural Act, while 3.11 has to do with Finance Control and Management Act, and lastly, the 3.12 has to do with the Fiscal Responsibility Act. 4.0 has to do with the methodology adopted by the committee to carry out this assignment. 5.0 relates with the objective of the bill, which include A. Enhancing domestic revenue mobilization efforts to increase tax and non-tax revenue. B. Tax administration and legislative drafting reform, particularly to support the ongoing automation reform by the Federal Inland Revenue Services. C. Accelerated international taxes reform to enhance the taxation of non-resident individuals and companies for nevertheless drive profit from Nigeria. D. Implement financial sector reform to support ongoing capital market reform related to security lending transaction, real estate investment trust, unit trust scheme, and the recapitalization of insurance companies. And lastly, prioritize the critical public financial sector. The public hearing. As 6.0 has to do with the public hearing, and underneath the following stakeholders made presentation and submitted memorandum on the bill, and that is listed under 6.0. Now I go to 6.1, which has to do with the observation. After exhaustive deliberation and review of the above presentation and submission, the committee observed as follows. 1. The partial rollback of exemption of shares from capital gain taxes are as a result of tax high value disposal, which provide reinvestment relief to encourage long-term equity investment. 2. The excise of tax and closed tax loopholes in gambling and lottery companies. 3. The committee observed that there exists a closed tax loophole from introduction of the Petroleum Industrial Act and the transition of the oil and gas company from Petroleum Profit Tax Act to hydrocarbon tax under the Petroleum Industrial Act and Company Income Tax. 4. The committee observed that there is an inequitable deduction of qualifying capital expenditure for the medium, small, and medium enterprises income. 5. The committee observed the existence of tax abuse and tax evasion of personal and children relief under the personal income tax. 6. The committee observed the absence and need to provide an administrative framework for the real estate investment collection of Nigerian Police Trust Fund levy on the net profit of Nigerian operating companies. 7. The committee observed the need to enhance the automation of the ICT and tax administration reform on banks, rendering returns to FIRS on taxpayers' customer data, investigation of tax crimes, and taxpayers' confidential data by FIRS. 8. The committee observed the need to enhance taxation of non-resident taxpayers, e-commerce business, non-resident companies, and VAT obligation of digital non-resident companies on a fair and reasonable turnover basis. 9. The committee equally observed the need to amend the Company Income Tax Act and the Income Act for tax equity on the following basis. Number 1, security lending transaction reform by Security and Exchange Commission, the minimum tax for companies in general, the taxation of unit trust income, the real estate investment reform by Security and Exchange Commission, insurance company capitalization reform by NICOM. 10. The committee observed that the tax administration and the DRM reform will streamline FIRS mandate as principal tax collection agency. 11. The committee observed that the electronic money transfer levy will streamline and enhance governance and administration by FIRS. 12. The committee observed the need for NASENI levy to align with current realities by ensuring that the NASENI Act is implementable. 13. The committee equally observed the need to enhance public financial management reform to reduce revenue leakage and track actual expenditure to revenue performance in line with the provision of the Constitution of the Federal Republic of Nigeria, 1999 as amended, Fiscal Rules and Other Extant Money Act in Public Financial Management. 14. The committee equally observed to enhance public financial management through public debt management, and there is need for sovereign debt management reform. And 15. The need to increase the educational tax by 0.5 due to the dwindling revenue of TED fund as a result of provision of the Finance Act 2020, where small companies whose turnover is below 25 million naira are exempted from paying educational tax as an incentive to encourage their continuous existence. Recommendation, which is under 8.0. The observation is under 7.0. The recommendation is as follows. 1. That the 5% capital gain tax is to be imposed on shares disposal transaction where gain exceeding 250 million naira in 12 calendar months as reinvestment relief with obligation on the taxpayers to report disposal to FIRS annually. This has not been done in the past. 2. The gaming and lottery companies shall be taxable to bring betting, lottery, gaming, and wandering, etc. companies within the corporate tax net. 3. The committee recommends that the oil and gas company should be taxable, while the midstream and downstream oil and gas companies are liable to corporate tax without the benefit of tax exemption for firms exporting goods to earn foreign exchange, in order to prevent double dipping by the gas utilization, as well as 2. Petroleum profit tax incentive or the pioneer tax holiday under ITRA. 4. The committee recommends that the qualifying capital expenditure rule for small and pioneer companies be explicit to prevent double dipping by mandating that the companies cannot deduct qualifying capital expenditure to reduce their taxable profit where the relevant qualifying capital expenditure is used to generate tax-exempted income. 5. The committee recommends that to prevent aggressive tax planning, where individual taxpayers may abuse children and other personal relief to reduce or eliminate tax liability to their state of residence or the ICT. 6. The committee observed the need to empower FIRS to collect Nigerian Police Trust Fund levy on Nigerian companies on behalf of the fund, and to streamline tax levy collection from Nigeria companies in line with the President Muhammadu Buhari administration ease of doing business reform. 7. The committee also recommends the need to ensure that FIRS deploy more proprietary and third-party technology applications to collect information from taxpayers, enhance confidentiality and non-disclosure, and to enable them investigate tax evasion and other crimes and sanction non-compliance taxpayers. 8. The committee recommend the need to empower FIRS to assess non-resident firms to tax on fair and reasonable turnover basis on turnover earned from digital services to Nigerian customers with a further mandate to appoint persons for the purpose of collection and remittance of non-resident taxes. 9. The committee recommends the need to provide necessary reforms on security lending transactions, minimum tax for insurance companies in general, taxation of unit trust income, real estate investment trust, and insurance company capitalization by NICOM in line with the tax equity. 10. The committee recommends the need to mandate FIRS as a principal tax collection agency and collaborate with other law enforcement MDAs in streamlining tax collection by enhancing public financial management reforms, thereby reducing revenue leakages and better track actual expenditure to revenue performance in line with the provision of the Constitution of the Federal Republic of Nigeria as amended, Fiscal Rules and Other Extant Money Act. 11. The committee recommends the diversification of Nigerian revenue from oil sector to other sectors to fund critical expenditure. 12. The committee recommends the need to continue close monitoring of unfolding development and policies on the value-added tax, tax incentive, projected tax reliefs on tobacco, alcohol, and carbonated drinks to fund vital expenditure on health, education, security, and possibility of introduction of new taxes, tariff, and levy as the economic recovers. And lastly, the need to increase 0.5 in the educational tax. 9.0 conclusion. The committee expressed appreciation to the leadership of the Senate and also thanked the entire members of the committee and the staff of the Secretariat for whose work assiduously to ensure the timely completion of this report. Mr. President, distinguished colleagues, I so submit.
In the Committee of the Whole, considered the report of the Joint Committees on Finance, Customs and Excise, Trade and Investment on the Finance Bill 2021 and approved as follows. Long title as recommended, Clause 1 to 34 as recommended, Interpretation as recommended, Sources of the Trust Fund as recommended, Fund of the Agency as recommended, Legislative Control and Management of the Public Finance as recommended, Minister's instruction to be complied with and powers to inspect ETC as recommended, Framework for Debt Management as recommended, Short title as recommended. Is this a true reflection of what transpired in the Committee of the Whole? That this bill be now read the third time, say aye. Those against, say nay. The ayes have it. Clerk of the Senate.
Mr. President, distinguished senators, a bill for an act amend the relevant tax, excises and duty statutes in line with macroeconomic policy reforms of the federal government to amend and make further provisions in specific laws in connection with the public financial management of the Federation and for other matters connected therewith 2021 SB 873, third reading.
With macroeconomic policy reforms of the federal government to amend and make further provisions in specific laws in connection with public financial management of the Federation and for other matters connected there with 2021, third reading taken, and the bill is passed.